today's video, we want to dig specifically into how we find acquirers for businesses. We've analyzed the company, we understand who they are, what they do, who they serve, what pain they solve, and what makes them special, what's their edge. Now we want to communicate that to the market, communicate the value proposition, and extract what offers we can. And to do so, it takes iterations and a broad range of communications with parties of different categories, spanning strategics, financials, and everything in between. Well, how do you actually find who those people are? How do you actually do that research? We break that down into 4 primary categories of how we go about that. First of these being databases. So in the investment banking space, you'll hear Capital IQ and PitchBook being some of the most well-known, but there are many databases that we can research precisely who has bought what, who is buying what, who has principals in their firm that have acquired companies in certain industries, which firms or strategics have made certain acquisitions, when they've made it, what's the cadence of their acquisitions, the prices paid. There's a lot of good information in these databases, and we certainly want to harvest that. The second is AI. And I know in today's day and age, everybody just sprinkles the phrase AI in any process they do, and it's supposed to be magical. But in our industry, there are certain, whether it's software solutions, database enablement, there's different components of AI. Some self-developed within our firm helps us find information, parse information, again, looking for those same objectives of who is active, who has historically been active, and then further digging into intent of who may be active or desirous of being active in a particular space, in a particular industry, for companies of a certain size and complexion. Third category is relationships. Again, we define our expertise pretty tightly in that we are working with companies that are, for the most part, privately held companies generating $1 million to $10 million in pre-tax earnings. That they're not, for the most part, private equity or venture capital backed. So we call them non-sponsored situations, companies owned by entrepreneurs, owned by families, owned by groups of investors. And when you are in a specified swimming pool, if you will, every day, if we're constantly talking to the same people, both on the side of our clients, as well as capital providers, as well as prospective acquirers spanning strategics, family offices, private equity firms, independent sponsors, search funds, high net worth individuals, the whole spectrum. When we're having those conversations nonstop, we're constantly talking to people about, okay, this opportunity may not be for you. What are you looking for? And we have our whole team having these conversations nonstop. And so we're constantly gathering data and information about what different people are looking for. And in doing so, we have a very good pulse on the acquirer market for different businesses and different industries. And this is a very valuable thing to overlay some of our more quantitative or qualitative research. And to that last point, good old-fashioned research is a big component of how we find prospective acquirers for different businesses. And that leads to the fourth prong of good old-fashioned research. So a lot of what we're doing, a big component of what we're doing, is purely reading nonstop news, whether more macroeconomic, microeconomic, industry-related, reading some of the industry publications, newsletters, attending events, reading transcripts from events, listening to speeches, understanding and absorbing ourselves entirely in the industry for a particular engagement, such that we can really get a pulse, in addition to all of the other components, to gathering information, to ultimately distill this down to which parties would be optimal to reach out to. And so, again, summarizing these 4 prongs: databases, AI, relationships, and good old-fashioned research. So the conclusion to draw from this is that the optimal approach to finding acquirers for a business is a combination of what is new, what is cutting edge, with what has always worked. You can't rely entirely on what's new. You'll miss a lot, and there's a lot of granularity and information that just comes from good human-to-human communication. But if you rely entirely on that, you're not necessarily pushing the bounds of what you know and who you're speaking with. So it's this optimal combination, as we say in many of our videos, evolution, not revolution, that allows us to get the optimal set of counterparties for a particular engagement. So that's the thought for today. I hope the week's getting off to a good start for everyone. Keep pushing forward. God bless. We'll see everyone next time.